Hey, good morning, everyone. Welcome to this video on the euro dollar and pound dollar. Last day of November, and also, of course, tomorrow, the first day of December. Both days volatile, typically a little bit different than usual. Last day of the month, first day of the month could be quiet and volatile at the same time. Volatile on the last day, quiet on the first day. So be careful of that. Before we start, also be aware of our Black Friday. There's still 2.5 days left, but yeah, it's getting towards the end now. So be aware that there's not that much time remaining now. And yeah, everything is discounted, basically manual and automated rental systems. So check it out. And now your dollar. Well, daily chart, the steaming ahead, finally getting that bullish break above the 20 EMA. And if we look, of course, at the price action, we already had some clue that that might be happening when price stayed above the 20 EMA, bouncing at it twice. Full bullish candles, full candles above the 20 EMA here and here. We had the HMA stay bullish angled and above the 20 EMA here, crossing it, and we had price breaking above the fractal, sailing above the 20 EMA. All of that, if you're wondering what am I talking about, all of that is explained in my SWAT course, by the way. So yeah, bullish signals basically. Now the question is this a 1, 2, and up for 3, or is it an ABC? To me, it seems like 50-50. It really depends on how price will respond to this resistance zone, which is the previous tops, and around level of 120. If price is there, if there's any strong bearish reaction, then it's likely to be an ABC. Okay, in that case, we had an ABC here. That probably completed then an A. This bullish ABC completes a red B, and we would expect price to fall down back to red C and retest these long-term moving averages, as you can see here, nicely aligned to the upside. And that will be acting like a pillow, which means that we expect price to use it as a support zone to finish red C and a bigger wave 4 and make a bullish bounce if we get that red C. And that red C is expected to probably take place in 5 waves like this: 1, 2, 3, 4, 5, back into those long-term moving averages and then bounce. Okay? Now, if, however, price, what would be a confirmation of such a reversal? Bearish candlestick pattern in this area, engulfing twins, some pin bar on the daily chart. That would be a pretty good signal. If we don't get that, if we just get dojis, you get a bullish candle followed by 2 dojis, or some flag, even a larger flag, that would actually be a bullish signal, because in that case we're looking at a bull flag pattern, or if we have dojis, that just indicates indecision. And if price then starts to break above 120, then we're looking at a bullish breakout instead. So let's take a look at the weekly chart here. Weekly candle, we are looking at already candle number 13 since this high. So we had a substantial consolidation already. So I would say that the bullish breakout is certainly not impossible. It's certainly, something on the table. It's about 50-50. Maybe the bulls have a slight edge, maybe 60-40 for a bullish breakout, but not much more, I guess, at this moment. Let's put a fib from here to here. All right, so the minus 272 target at exactly 120.03, as you can see. So yeah, the monthly candle, of course, today we'll finish the monthly candle. I mean, if it closes anywhere near the high, like now, we have a whole full trading day left, or almost a full trading day left. So we'll have to see. But if it does, that's a bullish engulfing twin, and such a monthly candle would be a bullish signal, would indicate that the breakout is more likely than a retracement. Although, of course, a retracement could go deep back to retest the previous lows and then still bounce. So we'll have to see. But this is looking bullish at this moment. All right, all these time frames are. So I think a bullish breakout has an edge looking at all this compared to a bearish wave C, but I would certainly keep both scenarios in mind. Once again, a very strong bearish daily candle would make that bearish reversal more likely. Otherwise, if prices go sideways, then a bullish breakout is more likely. 4-hour chart looks like a good move away from the 20 EMA, and yeah, we have to see how far this can push. This would really have to push above 120 before this is more likely a wave 3. At this moment, it could be both, as I said, a wave 3 or C. Difficult to say. We need a break above 120. Probably a flag and a break above 120 to confirm that, as I already mentioned before. Same thing on the 4-hour chart, same thing on the 1-hour chart. No new information on these time frames as far as I can see. So let's see how price responds to 120. I think that will give us the key information: flag and break, or reversal, retracement, and continuation lower. Enough on that. Let's take a look at the pound USD now. Monthly candle is looking bullish at this moment, pushing again above the 21 EMA zone on this monthly chart, and the weekly candle, a little bit of a wick, kind of facing this double top resistance. Could be a difficult zone to break with a lot of long-term moving averages. A bit more hesitant than the euro dollar, as you can see, but ultimately quite the same spot. It is moving up and very close to the resistance of 134.80. Here to break, pullback continuation on the daily chart and the 4-hour chart as well. And finding some good move up here, pullback continuation. These 21 EMAs providing good support. And now price a little bit in kind of an ascending wedge, which it broke actually to the downside, or maybe even a slight rising wedge, perhaps. And all of that, price did break below the support in that regard, and is making lower lows and lower highs. So it's a little bit more bearish than the euro dollar. You can see that definitely on the hourly chart a bit better, as you can see, in a bearish channel now at this moment, breaking this support and in this channel at this moment. That said, it is also using these long-term moving averages as a bullish bouncing spot. So it's a little bit tricky, I think. It's in this wedge. Probably will have to break this wedge for a more clear view on things. When we look at the 4-hour chart, it's more looking like an ABC completed at Wiz 8, to be honest. If I had to choose with the resistance top here, it is more looking at the 88.6 fib. It is more looking like a reversal. So if we get another close below the 21A and below 133, I think we should see a drop and kind of a continuation retracement down to these long-term moving averages here at about 132 and 131, as the first targets, I would say. So let's see if we get that bearish breakout. Of course, if it does move up, wouldn't ignore that either. It's possible it could still continue. This is also a consolidation zone, but would need a clear break above 134 for a move up to 134.75 and 135, which is only 75, 100 pips, so it's quite a small zone. And therefore, I think probably the better time frame for that is maybe a 50-minute chart, maybe a 50-minute breakout on the 4-hour chart, but look for a 50-minute flag in my view. That's what I'll be doing, and looking for continuation higher towards that target zone at 134.80, as you can see. So, all right, that's it. Black Friday, once again, lots of discounts, but only 2.5 days left. So don't miss that opportunity, and we'll be back on Wednesday with a new update. Tomorrow we have a new webinar on automated trading and ECS updates. Tonight, Nenad has a webinar with his weekly trading ideas. So enough stuff coming up. Wish you all great trading and see you soon. Cheers.